Hi traders, welcome back to another Forex market analysis video. My name is Matthew from Zen and the Art of Trading, and today I'm going to be breaking down the Euro dollar, Pound dollar, Dollar yen, Australian dollar, and the Dollar Canadian. First question I ask myself when I'm performing my top-down analysis is, what is the daily trend? And here on Euro dollar, we do not have a trend. We're just going sideways, and we're in consolidation. So that means that I don't have a daily bias. My daily bias is neutral. However, on intraday time frames, we can still get trading opportunities around structure levels. And so the next question I ask myself on my checklist is, what is the nearest support level and the nearest resistance level? And here on Euro dollar, the nearest support is right here. We're testing it right now at the 107.8 zone. And up here at 110 even is our resistance zone. The reason why this is a key level to me is it's been tested as support multiple times in the past and resistance recently. And same with this level down here. It's been tested as support multiple times. And if you look left, it's been tested as resistance as well in the past. And on Friday, we actually had a bullish engulfing candle, large wick to the bottom in this support zone, which to me indicates that there is buying pressure from this zone, and so my bias is bullish coming into this next week. If I drop down to the 4-hour chart, the next thing I look at is the trend on this time frame, and so we do have a bearish trend here on this 4-hour time frame. We are coming back up to test the previous swing lows, the previous support in this 4-hour trend, and it does appear as though this 50 EMA is acting as resistance. Tested it multiple times and rejected off it. So that's bearish for this time frame. But the fact that we just came into this key support level, this key support zone, and we've put in a daily double bottom. If I go onto the daily chart, you'll see that this candle did in fact close above the wicks of this previous bottom. So we have a valid daily bottom, daily double bottom. On the 4-hour chart, we did get a close below that zone, but we immediately rallied after testing below this zone. And so that has the appearance to me of a stop loss hunt. Market move is hunting the stop losses below this low. And typically after something like this occurs, we do have a decent rally. If this market was going to roll over to the downside, then I would have expected it to hold at these lows and continue lower into Friday. But instead, we ended up closing at the high of the day, of the day's trading session on Friday. And so the fact that the daily chart's given us a bullish engulfing candle, this time frame, this 4-hour chart, we have a large higher high, higher close, bullish engulfing candle, and a decent wick to the downside here. All of that makes me quite bullish on this currency pair going into next week. So my bias on the daily chart for Euro dollar is bullish. My bias on the 4-hour chart is bullish as well, but cautiously. I would need to see a break and close above these swing highs in here before I were to look for any long continuation trades out of this bullish move. Until we get a break and close above these swing highs in here, I'm standing aside on this currency pair. But if we do get that break and close above these swing highs, there's a high likelihood that price is going to come back up into this swing high, this previous resistance zone at 110 even. And so that could make for a great shorting opportunity, potentially, in there, depending how price action responds. If we get a double top or something like that, it could make for a great shorting opportunity. But otherwise, it'll be a good place to look to take profits if you do get a long trading opportunity from down here in this structure zone, or if we get that break and close above these highs and a pullback and continuation upwards. That could provide a good little risk-reward trade on the intraday time frames. Maybe not even on this 4-hour chart, but on a 1-hour, 50-minute chart, there could be an opportunity in there. And so that's all I have to say for Euro dollar this week. My bias is bullish on the daily chart, and cautiously bullish on the 4-hour chart. I'm not taking any trading opportunities where price is right now. You could go long at the close of this engulfing candle with a 1 ATR stop below the swing low in anticipation of price coming back up into this structure zone up here. But I'm not taking that trade because I haven't finished backtesting my structure trading strategies yet. And so I'm waiting for a trend continuation opportunity, and that means I need to wait for a bullish trending move on this time frame. So I need to see a 1, 2, 3 move before I can start looking for pullback trades to ride this market higher. So that's what I'm waiting for and looking for on this currency pair. And that's all I have to say about euro dollar. Let's move on to the next currency pair, which I believe is dollar yen. So here on dollar yen, we have a similar situation to euro dollar in that we are in consolidation, but we just double bottomed on a structure level. Last week, about a week ago, just over a week ago, we had this clean double bottom down here at this 107 even handle number structure support zone, which has been tested as support and resistance multiple times looking left. And that's what I look for in key levels. I want to see them tested multiple times from both sides of price action. And so I just need to change this to red. But my daily bias, the trend on this time frame is non-existent. We're in consolidation, and so I don't have a daily bias as such, given that fact. But on the intraday time frames, because we're so close to a potential structure support zone, it could be a trading opportunity down there. So let's drop down the 4-hour chart and have a little look at a closer look at what's going on. And this is a bit of a mess right now. We're in serious consolidation, even on this 4-hour chart. This 50 EMA appears to be acting as resistance. You see, every time we get above it, we're rejected off it. So that's a bearish sign, actually. We are forming a series of lower highs in here, kind of somewhat. We do have this wick up here that tested quite high, but it was immediately rejected, which is certainly not a bullish sign. And so we have this weird kind of consolidation pattern forming, this flag wedge pattern with a flat bottom, equal lows, and slightly lower highs coming in. So that's squeezing price action. And sometime next week, I would anticipate volatility expanding on this pair. I'm not really sure if it's going to break out to the upside or the downside. Well, we're not sure of anything in trading, but this pattern here would lead me to believe that we're headed lower. But given the fact that we have this major structure support zone so close to this pattern, it's not really a pattern that I see as tradable because of the risk-reward profile. It's skewed. Your stop loss would have to go above these highs, and your take profit would have to be around the bodies of these lows, which gives you a very negative risk-reward ratio. And so I'll be standing aside on this currency pair coming into next week as well. And what I would want to see before I would act on this market is this period of consolidation breaking to the upside, and then I'd have a 1, 2, 3 move, and then I'd wait for a pullback, maybe retested these highs before riding this market higher back up into the structure zone. But I'd need to see price break above this previous swing low in here, this major structure resistance zone, before I would get a decent risk reward profile back up to these highs. And so I don't like the odds of that happening this week, and so I don't think I'll be trading this pair this week. The only alternative trading opportunity I could see potentially unfolding here is a breakout to the downside of this pattern below this structure support zone and this double bottom in here. If we get this, then I'll have a bearish 1, 2, 3 move, and I'll be able to stalk short trading opportunities on the next pullback. And that would make for a great short trading opportunity if we get that break and close, impulsive break and close below these swing lows, and price holds and closes down there on the daily chart, unlike euro dollar, which immediately rejected back up into the price range. I'd need to see price hold below this structure zone before I would start looking for short trading opportunities to ride this market even lower. But that's what I'm looking for on this currency pair. My bias is actually neutral on this pair, just because of where price is right now, both on the daily chart and the 4-hour chart. We're just going sideways, and we don't really have any trading opportunities potentially setting up anytime soon. So I'll be standing aside on this currency pair going into next week, and I'll be waiting to see which way this little wedge pattern breaks out before I decide on how I'm going to act on this market. And so that's it for dollar yen. And let's move on to the next currency pair. So moving on here to pound dollar. We actually have a potential bullish trend reversal occurring here on pound dollar after this 1, 2, 3 move. Now last week I said that I was expecting this previous swing high, to potentially act as support because we had these two little wicks here that this daily chart was responding to the previous swing high, and previous resistance can often become support, as we all know, but that didn't happen in this case. Instead, price has just rolled over below this swing high, and yeah, now we're moving lower. But until we break and close below the low of this wick in here, we still have a valid 1, 2, 3 move and potential bullish reversal. And so my bias, my daily long-term bias, is still bullish on this pair. I'm expecting this high to be tested before price breaks and closes below this swing low. But in saying that, if I drop down to the 4-hour chart, we actually have a bearish trend developing on this 4-hour chart, this intraday chart. We have this 1, 2, 3 move, and now price is coming up to retest the swing lows of this 1, 2, 3 move. And so I'm actually bearish on the intraday time frames here. I'm expecting price to come a little bit lower and test the bodies into this zone here between this wick and the bodies of this swing low. And so I'm bearish on the 4-hour chart, and I'm actually short after this bearish engulfing candle here and this 1, 2, 3 move. And so even though my daily bias is bullish, my intraday bias is bearish. You can see we have somewhat of a bearish flag pattern forming in here. And so yeah, next week I'm expecting this market to head a little bit lower and hopefully hit my profit target, which is down at the bodies of this swing low. And then when we get down into this zone, I would probably expect some bullish buying pressure, just given the fact that this intraday daily, daily trend, this reversal, is intact until we get a break and close below this swing low. So delete some of these lines, but that's what I'm expecting this week out of this market. My daily bias is bullish, my intraday bias is bearish until we get down into this zone. And if that happens, then my bias will shift to bullish. Alternatively, if this market puts in a 1, 2, 3 move like this and stops me out of my other position, out of my short trade, then my bias will also shift to bullish. So if either of those two things happen, either this market moves a little lower into this zone, or we get that 1, 2, 3 move, then my bias will shift to bullish. But right now it's bearish, given this little trend that's developing on this 4-hour chart. And so that's it for this currency pair. But certainly pay attention to this structure zone down in here. This previous swing low could offer some great long trading opportunities, and a retest of this swing high up here could potentially provide some decent short trading opportunities if you get a double top or something. This also was a major structure resistance level looking left. It's been tested as support and resistance multiple times. But the fact that we closed above it leads me to believe that there is a bit more momentum in this trend than I would expect to see if the structure zone was going to reverse this market. And so we have had some selling, some profit taking from this very impulsive move down here. Traders are taking profits up here, but whether or not it's enough to actually reverse this market, I'm not convinced. So keep an eye on this zone down here coming into next week. And if we do get a bullish move out of here, this previous swing low has a high likelihood of having a bearish effect on price, as traders will be referencing it for profit taking, and there could be potential short traders ready to pounce on that level when we get up towards this 1.28 zone. And so that's it for this currency pair. Let's move on to the next one. Which is Australian dollar. So Australian dollar has done a similar move to pound dollar in that we have this 1, 2, 3 bullish reversal pattern, and we're now testing this major structure support zone looking left You have to go right back to 2009, 2008 to see this level being tested as support and resistance multiple times. But we are appearing to hold above it now. I've had this little double bottom in here. Drop down now. First of all, my daily bias is bullish because of this 1, 2, 3 move. Till we get a break and close below this swing low in here. And my long-term bias is bullish on this market. But if we drop down to a 4-hour chart, you can see we had this double bottom down here that has now pushed price into a 1, 2, 3 move higher. So my bias is bullish on this pair, and I'm expecting a retest of this swing high up here before we get a break and close below here. And so I don't see any trading opportunities setting up in the immediate future, but certainly on the lower time frames you may have some long trading opportunities setting up in the week to come. We also have this little sort of bearish minor trend line in here the price is broken out of, so that would lead me to believe that we are probably going to see this market continue higher from here, but I don't really see any way of taking advantage of that right now on this 4-hour chart. Maybe on the lower time frames you might have some flag patterns. Here's a nice flag pattern here, so you'd wait for the break and close above the minor trend line, stop loss below previous swing low, and targets at whatever you set your targets at. That's one way to take advantage of the bias, directional bias. And if you're expecting price to get up to this previous swing high like I am, then that's one way to take advantage of this market being attracted to that level. And so my 4-hour bias is actually bullish because of this 1, 2, 3 move, but I don't see any way of taking advantage of that just yet. So I'll be standing aside until we get another break and close above the swing high, and maybe if we get a pullback that offers a decent risk reward back up to this swing high, then I may execute a long trade if I get a setup that meets my rules. But right now I'm standing aside on this pair, waiting to see where the market goes from here, and yeah. It's certainly looking more bullish than bearish. We do have higher highs and higher lows on this chart, so be careful going short. If you're going short, I'd wait for a double top up here, and ideally a retest of this swing low in here. So this zone in here is likely to act as resistance. You can see we did get a slight test of the wick in here, and then price has rolled over a little bit, but we appear to be coming back up to retest this zone. And so I'm anticipating price poking a little bit higher than this and potentially testing the swing low in here. So that'll make a great spot to take your profit off if you do get a long trading opportunity, and potentially a good spot to be looking for counter trend trades like double tops and that sort of thing. So that's it for this currency pair. Let's move on to the next one. Which is dollar Canada, dollar Canadian. So dollar Canadian, last week I said my bias was bullish because of this large bullish candle here. Even though we had this 1, 2, 3 move, it was very weak break and close below this swing low, and immediately following it we had this large rally. And so since then we've put in somewhat of a head and shoulders pattern. So we've come back up above this previous swing low, and we've retested it from the other side, and it has acted as support and pushed this market higher. So my daily bias is bullish on this currency pair. Even though we don't have a bullish trend, we're in consolidation. We are above this major support level, and we're testing it from the other side, and it is showing signs of acting as support. So if we drop down to the 4-hour chart, you can see we did have this 1, 2, 3 move. And until we get a break and close below this swing low in here, you can see we did test it recently. Late last week, we did not get a close below it. So this 1, 2, 3 move is intact, and so my daily bias and my 4-hour bias is bullish. I'm expecting this market to continue higher before it does break and close below this swing low. I don't see any way of taking advantage of that just yet. We did get a double bottom down here, but I don't trade that sort of pattern on this time frame, and so I've got no way of taking advantage of this market. What I will need to see, according to my own personal trading rules, is a break and close above the swing high and a pullback that I can trade to the upside, potentially back up to this resistance zone but you can see that this structure resistance zone. But you can see that this minor resistance zone in here is acting as resistance again. We had 4 tests of resistance up here, and so this 5th test was rejected from this level, and that's very interesting to note. So if you do get a long trading opportunity from down here, say if you are able to trade this double bottom, and you went long here with a stop loss below this previous swing low, these highs up here could be a great area to look for taking your profit off. And yeah, so that's all I have to say for this currency pair. Bullish bias on the daily chart and the 4-hour chart. And unless we get that break and close below the swing low, if we get that, then my bias will shift to bearish. But we are entering quite a large period of consolidation here, so I won't be able to take any trading opportunities if we do get that break and close below the swing low. I'd need to see the market get below these lows in here before I would consider taking any short trades on this currency pair. So I'm favoring long trades at the moment, and in order to go long, according to my rules, I need to see another break and close above these swing highs and these this resistance zone in here. And so that's all I have to say for this currency pair. Let's move on to the economic calendar and see what's on this week. So here we are on the Forex calendar, the global economic calendar. We don't have a lot on this week. There's a couple of things that stand out to me. The main ones that stand out to me is core price inflation from the Australian dollar on Wednesday. GDP from the US on Wednesday as well will be interesting. It'll be Wednesday morning for Americans and Wednesday night for me here in Australia. The next one that stands out to me is the FOMC. That's always that tends to be a market moving high volatility event. So that will probably cause some volatility, especially whatever the Fed has to say in their statement will definitely have an effect on the US dollar to some degree. I don't know if it'll be bullish or bearish, but I would be expecting some volatility this week on the US dollar late in the week. Same with the euro dollar. We have their interest rate decision and their monetary policy statement as well from the European Central Bank. So that'll be a market moving event for the euro. Definitely be careful trading around these times. And then we also have unemployment claims from the US on Thursday as well. So Thursday is going to be a big day for the markets. I would anticipate some big moves, especially on euro dollar, because they're both in play, fundamentally speaking. And so that'll be an interesting day for those currency pairs. That's all that really stands out to me here on the calendar. We've got GDP from Canada as well on Thursday. So US dollar, euro, and Canadian dollar, the loonie as they call it. Those three pairs are going to have a lot of volatility on Thursday, I would anticipate. So be careful trading on Thursday. If you're an intraday trader, it may be best to either stand aside or certainly be conservative with your risk, your stop loss management. Don't let any of these trades get away from you, because some of these moves could be quite volatile given the situation with coronavirus on the economy. There's a lot of changes, big changes occurring. So that's it for this week's market analysis video. Thanks for watching, everyone. I hope you have a great week. Manage your risk well. Trade green. Take care. Be safe out there. See you in the next video.